he goes into it step by step and says, this is what we do as price plungers. We want to knock a market down. We want to scare the piss out of weak hands into selling so that we can go in and scoop in and buy, and buy what we're trying to buy as cheaply as possible and ride it higher. And we had a V bounce on the rest of this week for the most part.
Hello there, my friends. Chris Marcus here with you for Denver Dave Kranzler's gold and silver. No, it's the silver and gold update. What am I thinking? You just look so sharp in your button-down shirt today, Dave. I'm a little smitten and distracted, but it is a pleasure to have you on here. And how are you today, sir?
I'm doing well, thank you. You know why?
Why is that?
Because I've got my own softback copy of Big Silver Short.
Well,
it makes fantastic nighttime reading.
And well, I appreciate that. I'm wondering, has it impacted your trading at all?
No.
I mean, I know you know a lot of this, but did it at all help put in perspective? Or you're just already too smart. You're like, it's fun to read.
Well, I mean, I've been involved in this sector for 20 years. So
I think you should study that chapter 1, where this guy from Investment Research Dynamics, who was the first chapter in the book.
What does he know about this stuff?
That guy seemed pretty sharp. It was interesting. He talked about the Hunt brothers, the real deal with Warren Buffett. He not only once bought a large chunk of silver, but did it twice, got into it. Yeah. And you covered all of that. I mean, I don't know. I like the whole thing, but I would say that even if you got whether the paperback or audio version, if you just read your chapter, you'd get the general thing. I mean, you get what you need to know if you needed a shortcut.
Yeah, but you get to hear it from all angles.
Yeah, that's what one of the things I liked, where it wasn't just you saying about Warren Buffett getting forced out due to, I think it was the deal with General Ray, but several of the people there independently just said the same thing on a lot of these topics, which, again, I think you could be like, your chapter could be a Cliff Notes version, but really to have a fuller understanding in the way repetition helps things sink in. So I'm glad that you got that over there. And is your copy signed yet, Dave?
Next time I see you, I'll have you sign it.
Oh, and you actually have some fan mail there, big boy, because a kind woman named Robin from Australia has sent a silver coin from the Perth Mint, one for my mom and one for you.
Oh, awesome.
I looked at the one that she sent for my mom. It's quite beautiful. There's like a hologram on one side of it. Maybe
the hologram makes it harder. It makes it almost impossible to counterfeit.
Yeah, I did not open yours yet, but maybe, if you can fit me in between tennis matches on the weekend, I'll bring it by. And it was certainly very kind of her, as really representative of a lot of the audience. I get many comments about you. A lot of people picking up your journal there. And although, Dave, before we dig in, I'd like to let you and our audience know today's episode of Denver Dave Kranzler, sponsored by Bluestone Resources. We had Jack Lundin on a month or two ago talking about his Cerro Blanco gold project. Little update came this week. As Cerro Blanco advances to construction, Bluestone has entered into the engineering phase, and you can find out more about them by going to bluestone.com, or is it Bluestone Resources? bluestoneresources.ca, and again, they're bringing you this talk with Dave, so thank you, and it'll be fun to follow up on that. And Dave, certainly quite a wild week in the gold and silver markets. I guess Tuesday, everybody was wondering if the gold and silver bubble had popped.
Who said it's a bubble? Who said it's a bubble?
I've heard the B word a little bit, not too much actually. Although I did.
You haven't heard it from people who know what they're talking about.
Well, why don't, for anyone, because Dave, believe it or not, there's a couple people who are new coming in. And if we're going to help spread the word about gold and silver to a wider audience of investors that are increasingly seeing the complete theatrical charade being run at the Federal Reserve. But I mean, how would you put it in context for someone who's new to this and who's just coming into gold and silver for the first time? Because I think people were freaked out on Tuesday.
Well, I mean, how do you not get freaked out? You wake up and silver's down 10%. I mean,
Can I answer that?
what's that?
Can I answer that?
Sure.
I've been re-listening to Jeff Yass's chapter of The Market Wizards. That's the guy who started Susquehanna, while reading Phil Hellmuth's book as well, The Poker Player. Now, two great poker players. Phil, you know, if he has a blind spot or an Achilles, it's sometimes the emotions. Certainly I can associate with that. That's, you know, getting a handle on my emotions has been a lifelong quest. And then when I listened to Jeff Yass's chapter, the guy was asking him how he handled when he lost at poker. And he said, well, as long as I know I'm playing right, I don't care. I keep going. And when we have good money management in place. And so I was actually feeling pretty good, because even when Tuesday was down, you know, I've spent these last years setting up my life and income and business in a way that I was excited, because, all right, if I think there's great conditional probability coming up here, by the way, if I think there's X percent of chance that the COMEX is going to run into an issue on September deliveries, if that probability didn't change Tuesday, which to me it didn't, but the price went down 10%, plus the vol, at least on the upside, gets crushed, then you're getting better odds. And I think that is the key, where it's like over the next 5 years, there's going to be more than 2 or 3 days where the prices are down a lot for no particular reason. And I'd be curious. I know you've traded on Wall Street. Obviously, can be a stressful environment. Although my feeling is that the more we're able to handle those things and be prepared, so that rather than melting down at and going on tilt like Phil struggled with in the past, you know, is it really more mindset to be able to handle that?
Well, I think the precious metals sector, for a lot of different reasons, is always very volatile, right? I mean, if you go into it, I mean, honestly, unfortunately, I think a lot of people get into it looking for investment gains, and they're chasing momentum, as opposed to the real reason you should be buying physical gold and silver is for wealth preservation, right? I mean, James Turk posted a great chart on Twitter yesterday that showed the gold versus, I guess there was 3 different currencies: the dollar, the euro, and maybe the yen, and then the gold oil ratio. And actually, it might have been those currencies as a ratio of the price of oil, and then gold versus the price of oil. And gold will buy the same amount of oil now as it would buy 50 years ago.
Yep.
Obviously, you can't buy the same amount of oil with the US dollar as you could 50 years ago, right?
No.
So the other analogy I like to use is if you use a pre-64 dimes and quarters were 90% silver, 10% copper, right? In 1963, it took 3 dimes, 30 cents to buy a gallon of gas. All right. Fast forward to today, anyone who uses a pre-64 silver coin to pay for their gasoline is a complete idiot. Why? Because if you melt down your pre-64 dimes, it only takes 1.5 dimes to buy a gallon of gas. So to me, that's as illustrative as anything in demonstrating the wealth preservation qualities of gold and silver. Now, it just so happens that there's also, you can also achieve investment returns from gold and silver because they're extraordinarily undervalued relative to fiat currencies, the quantity of fiat currencies.
So that means I
There
got
you
some
go.
upside here.
Right. That's what I'm talking about right there, man. That's your basement.
Uh-huh.
I wish that was my basement, but I know where you live.
Yep.
Since
Well,
I'm required to wear a mask, I could rob you and your cameras won't know who I am.
well, maybe this is my secret vault that is tucked away in a location you would not expect. Although I
But so
call
at
it
any
my
rate,
basement, maybe to throw you off of my trail. Although I have a question on what you just said, if I may.
sure.
Based on that, is it possible that the price of gold and silver hasn't changed a darn bit since gold and silver existed? It's really, we're watching the volatility in the dollar, because I agree with what you're saying. And I mean, I think there's layers. Yes, for most people, looking at gold and silver as something that's safe and hedging against is probably what's most appropriate for most people. To the degree we have some brilliant investors and fund managers and traders in our audience, I mean, it's a natural result of listening to you every week, big boy. And, you know, so I think there are people that are seeing it from a different perspective. Yet I feel like just framing it in terms of, you know, to me, like, I don't know, if silver hits 50 and I earn money that month, am I going to keep it in dollars or silver? You know, I'm willing to take that risk that, you know, maybe it does go back to 25, but it's like for the next, when the Fed's doing what they're doing, it's almost like, what other choice is there? I mean, or unless, have you changed and you're going to say like people should invest in Tesla shares that up eightfold since the repo lines? But it's like, really what? So I get it, there's the volatility, but almost, is that a good way to approach it, where with the shares or even bullion, again, you know, each person, you got to know what's suitable for you. But like if gold goes to 2,500, it's like, you're going to be like, oh, well, I'm going to buy treasuries now. There's almost no other option.
I mean, here's the thing. So since 1971, the dollar has devalued something like 95% or 90% versus gold, right? And it takes, in 1971, it took $35 to buy an ounce of gold. Now it takes, you know, well, including the premium, if you're buying coins, you know, you're paying $2,000 to buy an ounce of gold right now, right? So, I mean, and it's going to get worse because the Fed's going to have to print a lot more money. So, and I was talking about this with a big investor in my fund, because he was like, you know, I've got a lot of gold and silver, and I've got a portfolio of mining stocks, and I've got muni bonds, but where I still have money that I need to invest. What do I do with it? What are my options? And after we talked about it for about 30 minutes, he concluded that the only option right now is gold and silver, physical gold and silver. I mean, my point
Maybe
was
platinum too, but
well, platinum's not a monetary metal. Platinum's a commodity, and if we
I'd
really
still,
go into a deep recession, the price of platinum's going to plunge.
I
But
will just, I'd take the other side of that trade.
that's
Can we
fine.
make
But
side
for me,
markets
platinum's
for
irrelevant because it's not a monetary metal. All right. The
Fair
BIS
enough.
has made gold a tier 1 asset. I don't see them making platinum a tier 1 asset. So, and silver is poor man's gold. It's been real money longer than gold actually throughout history. So, but at any rate, I said, look, you know, your munis mature. You got the cash. You can take that cash and stick it in your mattress, because you know you're not gonna put it in treasuries those are also being devalued every day by the money printing and zero interest rate policy. And at some point, the market, I don't know about the Fed, but the market might take the interest rate negative on treasuries. So, you know, why would you pay the government to invest in their bonds? That would be idiotic. It's one of the dumbest things I've ever heard of in the history of mankind. Paying a government to invest in their bonds. Tell me that isn't stupid. Idiotic. I mean, it's like, you know, take as much LSD as you can handle before you die, idiotic, you know? So, but at any rate, I said, you know, I'm defaulting to what happened at the end of the Weimar period in Germany, right? I mean, you know, wealthy Germans had, I think the currency was called the Reichsmark, or it might have just been called the mark, but they had the currency, you know, they had taken, you know, they had their gold, of course. They also had currency, or they had money in the bank, you know, and on November 13th, 1923, you go to bed and you got 1,000,000 marks in the bank, or you got 1,000,000 marks in your mattress, and you wake up the next day and your marks are worthless. But guess what? The value of your gold went to Pluto, priced in marks, and you had a currency reset, and that's where we're headed. So, you know, you can keep dollars, you know, for lack, you know, and put them in your mattress for lack of anything else to do, and you feel like you have too much gold and silver, but the dollars eventually are going to be worthless. I mean, since the Federal Reserve was founded in 1913, the dollar has devalued something like 98.5% versus the price of gold. Actually, and Dave, you know, they're not going to stop printing money until the value of the dollar is zero.
Did you happen to catch that article by Jan Nieuwenhuis of Voima Gold, who actually got to meet in the Netherlands about 7 years ago? Nice guy. And it was interesting because he pointed out how at one point the the ounce of gold was $20.67. And when we hit the price recently of $2,000 at 2067, that shows right there, 99% of it gone. And that's with what's interesting. That's with the suppressed gold price and not really. I mean, I'm guessing Fort Knox is not all there, whether the Fed gold is there or leased out. So it's like really
not there.
I mean, it's
the fact that Mnuchin had to go to Fort Knox and walk out with a gold bar. I don't even know if he had a gold bar in his hand and say, "Yep, the gold's fine, it's there." The fact
that he had to do that tells you it's not there. He did not say that. He said gold is safe. And then
there you go.
And then he actually said, "Wouldn't it be a?"
But the implication was he went in there and saw the gold. Yeah, they keep some gold in there for tourism purposes. They keep it on display, but you know, where's the 8,100 tons that you supposedly have?
Yeah, I thought that was.
You know where it is? It's like in deep storage. And when Germany wanted to send some officials over to inspect their gold, the Fed said, well, we've got it in 9 different vaults, so and we can only let you in one of them to look at some of your gold. I mean, what is that? I mean, it's Germany's gold. And that's why I tell people, you don't own your gold unless you possess it. I mean, Germany thinks they own their gold, but the Fed possesses it, and Germany didn't have the option of inspecting all of their gold to make sure it was all there. The U.S. government wouldn't let them do it. So tell me how Germany owns that gold. They don't. In fact, they originally asked for over 600 tons back, and the U.S. negotiated it down to 300 tons over 7 years.
I mean, it's like
if the gold's there, why can't the U.S. just say, all right, it's on a plane tomorrow? I mean, supposedly there's all this gold being shipped readily from Europe to here, so transportation's not the problem, which is what the U.S. excuse was.
I found that quite bizarre at the time. You know, we can launch a missile into some guy's toaster halfway across the globe, but we can't get the gold there because all of a sudden planes stop working. But Dave, you made me find it, but it's so glorious. And I will let you tee off on this one. But first, we have a quote. I assume Fort Knox gold is still there. And if anybody else is a student of neurolinguistic programming, and which is basically the science of the specific words which Wall Street and the media is a master of conveying, it's like they usually don't outright lie, but it's like they phrase it in a way that gives you the wrong impression. But Dave, here it comes. And by the way, I did drive there. I think it was 2016. It was right before I met you, actually, because I thought there would be like a tour or something. You know, you can tour the Federal Reserve in New York, by the way, I'm going to do in October. Also, you got to help me get onto the Comex. I want to snoop around there too. But there was no tour. I'm like, I end up at the Fort Knox Army Barrack, and a guy like, "What are you doing here, buddy?" Like, no, I was just looking for Fort Knox. But it's actually around a highway, so you can't even really. It's not like you couldn't like pull your car over and even look from the other side of the fence. But it was weird because there was nobody out there. Now, I'm sure you'd think there would be guards. Maybe they were inside. I know there's a little couple towers I've seen in a video. There was no one out. It looked like just some abandoned warehouse.
Why do they need guards there? There's no gold in there. There's nothing to steal.
Dave, what do you think about Steve Mnuchin, Treasury Secretary of the U.S., who owns the Federal Reserve? I'm just going to say owns the Federal Reserve. I mean, independence. We'll leave that aside. World's reserve currency says, I assume the gold is still there. It would really be quite a movie if we walked in and there was no gold. And this guy actually has a background in making movies. So, I mean, is it at least reasonable to say, like, probably not appropriate given his position, even if he is joking, which I doubt he is, personally. I mean, but I mean, isn't that at least highly inappropriate?
I mean, he said he assumes the gold's there. So if he wants to believe it, that's his business.
Yeah, and
when I am investigating something or basing an investment into something, I want hard proof, hard evidence. I don't want hearsay. Hearsay evidence isn't allowed in court for a reason. Except under special circumstances. There are some exceptions to that, but it's few and far between. But I want to get back to your original question.
Okay.
Believe it or not, because you asked, what are people supposed to think of what happened this week? Well,
and I'll apologize there. You're just so darn interesting. I can't. It's like every
stop. Just stop.
morsel.
I'm gonna walk away if you don't.
I'm being a
I'm gonna walk away right now if you don't stop.
It is true, but continue.
So at any rate, I mean, the thing that kills me about a lot of investors is, I mean, gold went from what, 1,400 to over 2,000, to over 2,000 since mid-March. And silver, I forget how low silver got. Silver got down to
below $12.
Yeah, so let's just say $12. $12 to what? Almost $29.
Yep.
So you're telling me you're unhappy with more than a double in 4 months? It's like, what do you want? And this is silver. Silver, I mean, gold and silver they're basically, aside from the volatility, they're risk-free investments. They hold their value. Nothing else does. Well, very little holds its value. I mean, a Tesla, even though Elon Musk said it's an appreciating asset, Teslas don't hold their value. You can go out and buy a used Tesla for, a fraction of what it costs new right now. But at any rate, so we had it, I've been just on a technical basis. I felt like, even if gold is, crazily undervalued right now, it had a huge run. So there's going to be profit taking. There's going to be, technical pullback, technical price correction. I mean, that's the way markets function, right? You know that, Mr. Susquehanna options trader. So, I mean, like I said, I'd been calling for, a potential pullback for, the last 4 weeks. And I'm not trying to high tick a market. No one can do that. If any people who say they can high tick markets and time the bottom to put their money back to work, you might get lucky once or twice doing it. But if they say they do it consistently, they're lying, or they don't have real money on the line. So I think a lot of people just assume what happened on Tuesday was a product of extreme central bank, bullion bank manipulation, intervention in the market. And I do believe there was an element to that. because we know that the banks have been feeding paper into the market while the price runs up, and so they're short, and they want to knock the price levels down and cover their shorts, right? I mean, that's what traders try to do, and these are manipulative traders. I also would not rule out the possibility that someone like a Paul Tudor Jones, I'm not saying him specifically, I'm just using him as an example because he's probably the most famous of the commodity traders, certainly the most successful, at least, based on public track record. I'm sure there's guys that we don't know about who have done better than he has over the last 20 years. But at any rate, especially with markets like gold and silver that are very easy to plunge using paper, right? You price plunge it using paper. Banks do that all the time. So you could have a very wealthy investor or a large fund who wants to buy a lot more gold and silver, and they can go in and plunge the market. And what we saw happen on Tuesday could have been a result of that. I'm not saying it was, I'm saying I would not discount the possibility. It's probably a combination of the banks and maybe someone in there trying to price plunge it, because look at how quickly it rebounded. I mean, talk about a V. I mean, it's not a perfect V, but I mean, it's certainly a better V than the U.S. economy is. So, if you want to read about how traders, price plunge a market, just read, I think it's called Memoirs of a Stock Operator. It's Jesse Livermore.
Oh, I thought you were going to say read the Big Silver Short.
Well, you can read the Big Silver Short too. You read that, but he goes into it step by step and says, this is what we do as price plungers. We want to knock a market down. We want to scare the piss out of weak hands into selling so that we can go in and scoop in and buy, and buy what we're trying to buy as cheaply as possible and ride it higher. And we had a V bounce on the rest of this week for the most part. I mean, it's still volatile, right? It's like a super ball, right? You throw it in the air, it comes crashing down, and then it bounces, and I think that's what we're getting right now is kind of, the follow-up waves of buying and selling. So, again, it's we see these shock and awe price hits, many times over the last 20 years, and it's designed to scare people out of their positions, whether it's overt manipulation like the banks do, or whether it's just a price plunger going in there trying to buy cheap gold and silver.
Yep. I mean, we've seen it. That's why I did the book. That's why we do the show.
And one more point. I mean, it makes it much easier to plunge a market when you've had a near parabolic run up like we had in silver, right? Because you've got a lot of weak hands in there that are just trying to ride the momentum, and so they're going to be the first ones to dump as soon as they, and a lot of them probably, well, maybe not the first ones to dump. They'll hold on for a bit to see if there's a bounce, so a lot of them probably ended up, they made profits on what they bought, but they probably, I wouldn't have sold if I were them, but those are the ones that sold, especially if they sold above their original cost. Because, I can't tell you what the price path is going to look like, but I would hazard a guess that the price of gold and silver will be much higher at the end of the year than where they are now. And in between then and now, we're going to have more days like we saw Tuesday.
I hear you. I agree. And perhaps last question before we wrap up today. Now that you're getting fan mail, if somebody sends you a Tesla, what would you do?
I would sell it and get on the waiting list.
No, there's no option. If it's like you have to drive it, you can't cash out for financial gain. Well, I'm curious to see what happens. I might buy you one myself, especially because I know in your short sellers journal, which folks can find out about right here, you you do the mining stock journal too, but we haven't talked about the short sellers in a while, which lays out what's going on in the economy and with Tesla. And I know you've talked about how it's a great time to buy a used car. So, and with that Tesla inventory you described, maybe we can get you a deal. What color would you like your Tesla to be, Dave?
I'd like it to be non-existent. If I
Well,
decide to go EV, I'll put myself on the waiting list for an Audi e-tron or a Ford Mach-E, or I'll just wait and see, what else. There's a lot of new models of EVs from reputable OEM manufacturers that are going to be rolling out over the next 12 months, and they're going to be less expensive and much higher quality than the Teslas.
well, you're becoming so big time that you never know. We might have a sponsor say like, all right, get the Tesla, just to be associated with Denver Dave Kranzler. After we wrap up today, I'm going to see if I can convince you to throw in a raffle for Silverfest where people can auction off the chance to play tennis directly against Denver Dave. But with that said, another great call, sir. Appreciate you being here. It's fun as always. And again, folks, this episode was brought to you by Bluestone Resources. And to find out a little bit more about what they're doing and why they are offering leverage to the gold price, interview with Jack Lundin is coming your way now.